let me be clear. The BOJ basically cited two reasons to justify the rate hike yesterday. One is the data. They feel that the data is consistent with further progress in what they call underlying inflation. The second, which is also, I think, important, is that they now acknowledge that the upside risks to inflation from a weaker currency may be bigger than previously thought. So it's both the data and the FX. But on the data, I think you're absolutely right that, one of the main arguments that people gave in calling for a hold this week was that while there were some positive signs in the wage and inflation data, some of the hard data, the macro data, especially consumption, remained quite weak. And therefore, the BOJ would want to see evidence of an improvement in the hard data before it moved further. I think what's been made clear and what shouldn't be missed with yesterday's communications is that the Bank of Japan is much more focused on determining progress towards inflation on using an outlook-based approach. So, their argument is that, look, real interest rates today are incredibly low in Japan. Monetary policy is still very easy. Therefore, if things are broadly moving in the right direction and we can feel confident that inflation will move upward on a forward-looking basis, they're not going to necessarily wait for a decisive turn in the hard data before lifting rates further. So I think there was too much focus on current data and the hard data, and not enough of a focus on the types of forward-looking indicators that the Bank of Japan is focused on at this stage.